Bridge loans can be hard to qualify for and expensive. So on today's video, I'm going to talk about alternatives to this type of financing to buy the next house. My name is RJ Baxter. I'm an over 20-year veteran of the mortgage industry. Let's get into it. So bridge loans are one of the most expensive ways to access the equity on your current house to buy the next house. And there's a lot of misconceptions about them. So the first one is that you can access all the equity to put down on the next house. If that's your intention, to use all your equity on the new house, you just can't do it with a traditional bridge loan. Most bridge loans are capped at 80% of the home value for the house you're selling. Some go a little bit higher, but just taking the 80% example, let's say you're selling a $500,000 house, for example, and 80% of that is $400,000, and let's say you owe $300,000 on your current mortgage. That means with the bridge loan, you can only access $100,000 for the down payment on the new house. So it leaves you short on what your goal is. So that's one of the problems with it. The next thing is that with the traditional bridge loan, you have to qualify on the bridge loan payment plus your current mortgage payment plus the mortgage payment on the new house. So this is almost impossible, if not impossible, for almost everybody. So there's a lot of alternatives to bridge financing that can help you get that equity either cheaper or actually qualify if you're having a hard time in other means. So one of my favorite ways is to look at doing a home equity line of credit on your current house to access the equity. Now, home equity lines of credit, they have some of the downfalls of bridge loans. Like, for example, most home equity loans, they only go to 80% of your home value, maybe a little bit higher. However, home equity loans can be a lot less expensive and easier to get than bridge loans. So that's one of the huge advantages. Now, if you pursue a home equity line of credit, you want to make sure and talk to your bank and let them know that you're going to pay it off right away. Some banks don't like that. However, some banks are fine with it. You need to ask them if there's a prepayment penalty. But in a lot of cases, the prepayment penalty plus the home equity line closing costs are a lot less than you're going to pay on a traditional bridge loan. So that's my first method. The next one is to essentially loan the money to yourself. So some 401ks or other investment accounts, they have the ability to take out a loan for the purpose of buying a house or for other purposes and avoid tax consequences. So this is something to talk to your plan provider about to see if you can do that. You can also sometimes withdraw money in ways that are tax-free to buy a house, depending on your circumstances. So this is something to talk to your financial advisor about because this might be a way to finance the down payment and either pay yourself back or just flat out finance it that way and access that money for in a lot less expensive manner. The next one is to purchase the new house with less down and do what's called a recast on that mortgage. So let's take that prior example. You were wanting to access your $200,000 in equity on that $500,000 house, put it down on the new house, but you just can't do it in any other way. So you could put less down on the new house, let's say just the minimum, 5% down, 10% down, something like that. And once you sell your prior house, you can take the equity from that sale, make a large payment on the new mortgage, and then do a recast. So a recast means the lender who is holding the mortgage at the time, they just recalculate your payment based on the remaining balance and remaining term at the current interest rate. So in other words, it lowers your payment because they're calculating it on that lower balance. So that's what a recast is. That's one of my favorite strategies. The next one is talk to family. Maybe you have parents that are pretty well off, or brothers, sisters that can loan you the money for the down payment. That's a way you could do it, or get a gift from family. So that's a way to access some money in a way, whether it's some or all of the down payment. And then the final one that I want to share with you is what's called the buy before you sell strategy. And this is a really unique bridge style product where essentially the lender gives you a loan based on the value of both houses, the new house you're buying and the old house you're buying, allowing you to essentially pay cash for the new house and not have to qualify on all those mortgages. And then when your old house sells, you pay off a portion of that temporary loan, and then you refinance the remaining balance on the new house to get that final mortgage. So that's an awesome way. And I really like that strategy too, because it allows you to get out of the house, stage your house so it looks as best as it can, and you can get the best possible price for the house that you're selling. So those are just some of my favorite strategies. And if you're looking to access the equity on your current house to buy a new home, give me a call. We can talk about what might work in your circumstance. And of course, be sure to subscribe to my channel to get more great home buying tips like this.